Nifty opened strong above 25,900, made an attempt towards 26,000, but by the end of the day it quietly slipped into the red. The big question today is not why Nifty fell by just 40 points, but why the market refused to rally even with low volatility and selective buying. Was this distribution at the top, or just time correction before the next move? Let's decode today's market completely. Welcome back to Wealth Mama. If you are serious about understanding what actually happens inside the market every single day, not just the closing number but the real story behind it, then this post-market analysis is exactly for you. Let us first quickly look at what exactly happened in the market today. Nifty 50 closed at 25,818.55, down 41.55 points or 0.16%. The index had opened at 25,902.40, attempted an early move higher, but the day's high remained limited to 25,929.15. On the downside, Nifty slipped to a low of 25,770.35 before stabilizing. The total traded volume stood at around 2,065 lakh shares, with a traded value of approximately 19,787 crore rupees, showing that activity was present but conviction was missing. Market breadth was slightly negative, with 24 stocks advancing and 26 stocks declining, clearly indicating a narrow and stock-specific session rather than a broad-based trend day. Why market moved today? From a global perspective, there was no fresh positive trigger supporting aggressive buying. Global markets remained cautious ahead of upcoming macro data and central bank commentary, which kept risk appetite in check. There was no panic, but also no urgency to chase prices higher. On the domestic front, the biggest factor today was valuation fatigue near the 26,000 psychological zone. After multiple attempts in recent sessions, Nifty once again failed to attract follow-through buying above 25,900. This led to mild profit booking in heavyweight stocks, especially in financials and consumption names. Stock-specific action played a major role. Select PSU banks and metal stocks attracted buying interest, but this was offset by weakness in FMCG, insurance, and auto names. The result was a classic tug-of-war where strength in a few large stocks could not overpower the drag created by multiple index heavyweights. Sector-wise performance. Sectorally, today's market was clearly rotational rather than directional. PSU banking stocks outperformed, with strong contributions from names like SBI, which gained around 1.6%, indicating continued interest in public sector lenders. Metals also showed relative strength, with Hindalco closing up about 1.3%, supported by firm global metal prices. IT stocks remained mildly positive but uninspiring. Stocks like Infosys, TCS, and Wipro managed small gains, but there was no aggressive buying across the sector. On the weaker side, FMCG and consumption stocks saw steady selling pressure. Auto stocks also underperformed, with profit booking visible after recent rallies. Financials were mixed, where PSU banks supported the index but private banks and insurance stocks acted as a drag. Now let us talk about the stocks that actually supported the index today. Shriram Finance closed at 866 rupees, gaining 2.07%, driven by continued confidence in NBFC earnings visibility and strong volumes of over 116 lakh shares, indicating institutional participation. State Bank of India ended at 976 rupees and 35 paise, up 1.58%, as PSU banks continue to attract buying on expectations of stable asset quality and credit growth. Hindalco moved up to 848 rupees, gaining 1.30%, supported by strength in metal prices and improved global sentiment for commodities. Eicher Motors gained 1.15% to close at 7,143 rupees, indicating selective buying in premium auto names despite broader auto sector weakness. Tata Consumer Products closed at 1,180 rupees, up 0.86%, showing defensive accumulation within the FMCG space even as other consumption stocks struggled. On the losing side, selling pressure was clearly visible in high-beta and consumption-linked names. Max Healthcare was the biggest loser, falling 3.71% to 1,033 rupees, likely due to profit booking after a strong recent run. Apollo Hospitals declined nearly 2% to 6,912 rupees, reflecting sector-wide consolidation in healthcare stocks. Trend slipped 1.66% to 4,040 rupees, as consumption stocks faced valuation-based selling pressure. Bajaj Auto dropped 1.55% to 8,868 rupees as auto stocks continued to cool off after recent highs. HDFC Life closed at 752 rupees and 95 paise, down 1.49%, with insurance stocks remaining under pressure due to lack of fresh triggers. Now comes a very important but often ignored part of the market, the volatility index. India VIX closed at 9.84, down 2.24% for the day. This is a very low volatility environment and clearly tells us that there is no fear in the market right now. When Nifty falls but VIX also falls, it signals that the market is not expecting a sharp breakdown. Instead, it points towards time correction and consolidation, where the market digests recent gains before choosing its next direction. Support and resistance for next session. From a technical perspective, immediate support for Nifty is placed near 25,750, which also aligns with today's intraday low zone. A deeper support lies around 25,680, below which sentiment could turn slightly cautious. On the upside, 25,910 remains the first major resistance. Unless Nifty decisively closes above this zone, upside attempts may continue to face selling pressure. The bigger psychological hurdle remains 26,000, and only a strong close above that level can trigger fresh momentum. Looking ahead to tomorrow, the market is likely to remain range-bound with a slight positive bias as long as 25,750 holds on the downside. If the index manages to sustain above 25,900, we could see another attempt towards 26,000, but follow-through buying will be the key. However, if Nifty slips below 25,750, then we may see a slow drift towards 25,680, not a panic fall, but a continuation of consolidation. Traders should focus more on stock-specific opportunities rather than expecting a trending index move. To sum it up, today's market was not weak, it was selective and cautious. Low volatility, mixed sector performance, and narrow breadth clearly indicate that smart money is waiting for confirmation before making the next big move. If you want a daily, honest, data-backed breakdown of the market without noise, then stay connected with Wealth Maama. Also, don't forget to check out the daily Nifty analysis playlist on the channel, where we decode every single trading session in depth. We'll meet again tomorrow with another detailed market story. Until then, trade with logic, manage risk, and respect the process.